broadcast. Alrighty, everyone. This is James from Dividend Stock Talk, brought to you by the 10-Minute Trader, where I invest in dividend stocks for weekly cash flow, taking you along for the ride. Look at all these people jumping on in. Hello, hello, hello. Let's get this thing started. Come on. There we go. That works. Rolling dollar, cool beans, dividend stock, like the live. Cool beans. I did. Imagine that. Whit Schroeder, how are you? Dennis is here. How's it going there, Mr. Dennis? Papa S.A.? Is that right? I don't know. Mika? One more? All right, so we're getting ready to get started. Jump on in. We got some interesting things that happened today. I had a lot of questions about how are you doing with the crash. I didn't notice anything. Okay, what do you think about MYNZ? Do not gamble. MYNZ. Most people usually start it with a hi, hello, how you doing? But nope, he wants to just jump right on in and get started. Well, let's get to it then. What was he saying? MYNZ? Is that right? MYNZ. Never heard of it. MYNZ. Now, you know what happens with stocks I've never heard of? Mostly, they're going to be a no. Why? Well, this one doesn't have any options whatsoever. Now, in order for me to collect a safe, predictable, consistent 1% per week, I'm going to need weekly options on stocks. Okay, I like dividend stocks, specifically those companies that have consistently increased their dividends to the shareholders for more than 2 decades. That's 20 years consecutively. That means year after year after year after year, higher and higher dividends. This company here, no options whatsoever, so that's going to be a no. Sorry about that. Do not gamble. Beth, how you doing, Beth? Uh-oh. Jamie Byers. How's it going there, Jamie Byers? Jay Schraub, I can't even read that. Michael Baker D. I can't read that name. Sai. Singh? Is that Sukish Singh? I wonder if he's related to Jasprit. That'd be kind of interesting. But Singh is a popular last name. Mimi, how are you doing? Anik, how are you doing? YouTube picture okay. Thank you very much. I was going to ask, how's the YouTube looking? Okay, the YouTube's looking okay. Okay. Let's keep on going. Got a couple more questions to go. Mark wants to take a look at Walgreens. Well, I like Walgreens. Mark, let's take a look at it. WBA. But Mark, before I do that, hi, hello, how you doing? That's how we usually start up conversations here in the United States. Hey, how you doing? See, like GD, good evening, James. Then throw something at me. But okay, Mark Sherman, we'll take a look at WBA. I like Walgreens. Okay, as a matter of fact, ooh, Walgreens had an update today. Cool. Now, Walgreens started out a year ago at 20, what is that, 20, oh, 30, is that right? Is that right? Hold on a second. 30.15, check it out, exactly a year ago. Okay, way over there, okay? Now, this is the 1 year chart, way over there, okay, exactly a year ago. We're looking at 30 and change. All right, ended up the year at 26.77. That was in the end of January, I mean, end of December, beginning of January. Take a look at where she dropped. Okay, we were originally at 15.68 back in June. Look at that, 15.68 back in June. And this big drop down here to 12, from 16 to 12. Whoa, that's a big drop. Now, as soon as it dropped, I loaded up. Well, why? Well, here's the thing. Walgreens is over 100 years old. Over 100 years old. They have 8,700. That's 8,700 stores worldwide. You think just because they're having a little bit of a bad turn that they're going to disappear? Not a 100-year-old company overnight, especially, no, I can understand if it's like 1 or 2 outlets or 1 or 2 stores. Yeah, that I could grasp. 8,700? Okay, yeah, so they're having some issues. They're getting rid of 25% of the stores. Those are the ones that aren't, you know, turning profits. Well, that's what anyone does. If you got a branch that's not doing well, well, you eliminate it. You get rid of it. Simple. Okay, so today, let's take a look at the last 30 days, and that's to the 6th. Okay, 30 days ago, we opened up at 11:28. See it way over here, 11:28. She shoots up, pulls back, shoots up, pulls back. Here's where we are right now. All right. So yesterday was a 30-day bottom. Now, I'm not 100% sure if it's 30-day bottom because today is an up day. Okay, yesterday was a 30-day bottom. Today's a little bit higher. Great. Tomorrow we'll isolate whether or not it is actually a 30-day high. Because I like 2 days to the upside. Now, I do own Walgreens. I have quite a bit. I have a bunch at 12. All right, I got a bunch at 12 in this account. Oops, I have some in this account also. At 12 also. This account here, more Walgreens. Imagine that. 1150. All right, cool. Okay, so the 1150s. So I got some at 1150 and I get some at 12. Do I really mind? No, I don't mind at all. Okay, Walgreens has been in business for over 100 years. I get no problem whatsoever. Okay, so the last 30, well, that's MPW. We don't want that. Okay. So if you like Walgreens, take a look at the numbers. Okay, the last trade, 1091. The bid, 1088. The ask, 1095. Almost exactly where they should be. The last trade, the bid, the ask, right there. 13 million shares traded today. Cool. Okay, the 1095, the closest one's going to be the 11. And what is the 11 paying? Look at that. 17 cents a share. Now, it doesn't sound like a lot for you guys that are new here. Okay? For you guys that are new here, Walgreens sounds like 17 cents a share is not a good deal. Well, 17 cents a share is a great deal on an $11 stock. Let's open up a calculator to find out exactly what it means. All right, so if my profit is 17 cents per share, okay, and it's costing me $10.95 to buy it, so I divide that 17 cents a share by $10.95, and it comes to a grand total of 1.55% for the week. Not actually for the week, because if I do it tomorrow morning, Wednesday, Thursday, Friday, that's 3 days. 1.55% for the week until Friday, because this option here, look at 9 August 24. This one here expires this Friday. This one here, 1624. Well, look at the 11s going for this one. 34 cents per share. That's over 3%. Well, 1.5% for this week or 3% for next week. That's a tough choice. I might be leaning towards a 3% for next week because if we're here, okay, right now at the new 30-day bottom, previous 30-day bottom was 30 days ago. She shoots up, pulls back, shoots up, pulls back, gaps down. Now, if you guys know anything about the stock market, you know the gaps have a tendency to fill. Hakuna is here. Hakuna Matata, all the way from Sweden. How's it going there? How's the weather in Sweden today? We had a lot of storms here the past couple of days. Okay, so as I was saying, this week, the 11s are going for 1.55%. Next week, they're going for a little over 3%. You decide if you like Walgreens, because that's the big question. The big question is, do I like Walgreens, and do I like Walgreens at this price? Okay, simple. Do I like Walgreens at this price, and am I okay holding Walgreens for the long term? Some people may say no. Well, some people may say, well, it's at a low. Well, yeah, it's at a low. Where else are you going to make money? When you buy your stock low and sell high, that's where you make your money. And you can't get any lower than the 30-day low. Sorry, you just can't. Okay? So, let's move on to the next one. James Byer. Good. How's it going? Okay, it's going one. Hey, Chama Sexy, how are you doing? Uh-oh, where was I? I missed that. I missed some questions. There he goes, right there. There's Chama Sexy right there. All right. Okay, so I have no questions yet on YouTube, no questions on Instagram, no questions on Facebook yet. So let's see what we can do. Okay, Flipper, Do you find TGE premiums are better by letting them expire or resell versus rolling? Well, Flipper, I'm going to tell you what I tell everyone else. It always comes down to the numbers. Okay, so when we're buying on Monday, first of all, we have to make sure it's a good company. Remember the rules. Rule number one, never buy something you do not want to hold long term. Doesn't make sense. Okay? Rule number two, never sell at a loss. So the question comes down to Monday and Tuesday. That's when I do most of my personal trading. You guys can do whatever you want, but me personally, Monday and Tuesday. So I was looking this morning, I bought a bunch this morning. Yesterday bought a bunch. I make my money when I buy, not when I sell, because what I'm looking for a 30-day high and a 30-day bottom for it to bounce off of. That's what I'm looking for. It gives me the right time, because when you make the money in stock market, you buy low and you sell high with a good company. Now let's take a look at Walgreens. Okay, so if you take a good look, no matter where you go, hey, look, down, up, down, up, down, up, down, up, down, up, down, up, down. That's all stocks do. They go up, they go down. You pick a good stock, put it into your rotation, and if she's at a current down part right now, and you got the dividend coming up, well, that's like a double whammy. I don't know what else you want to call it. But I like buying stocks just before the dividend, because the stocks have a tendency to increase in value just before the dividend. So why not take the dividend and the chart? Because when the chart is high here, low here, and the dividend's in 2 weeks, well, stocks have a tendency to go up. Why not take advantage of that situation? That's all I'm saying. Why not take advantage of that situation? All right, that being said, let's move on to another one. So yeah, Flipper, it's always going to be about the numbers. Friday afternoon, I will jump in at 3 o'clock, take a look at all my positions and find out what is the best play considering where I got in, where it is now, the value of the current option, and what is going to happen over the weekend. Okay, is it being taken away from me? Is it being assigned? Is it expiring worthless? All these questions get answered at 3 o'clock on Friday afternoon. But if we go in Monday and Tuesday and we buy the right stock at the right time, we don't mind holding it for a long period of time. I had no problem whatsoever holding on to Walgreens, because I really, seriously don't think Walgreens is going to go anywhere anytime soon. Now, Walgreens is just one company that I keep in my roster. So what happens? When she goes up, I'll sell it. When she comes down, I'll buy it. And then I'll keep rotating back and forth between all the stocks that I like. Now, the stocks that I like, you got the Dividend Kings. You got the Dividend Achievers. No, wait a minute. No, not the Dividend Achievers, sorry. Dividend Kings, the Dividend Champions, the Dividend Aristocrats, the Dividend Contenders, and then Warren Buffett's list. Between those 5 lists right there gives me about 300 companies to look at on a consistent basis. So if you take a look at the calendar, there's only about 22 trading days in a month. And there's only 3 months for each quarter. Okay, the first quarter, January, February, March. Second quarter, April, May, June. Third quarter, July, August, September. Fourth quarter, October, November, December. So each quarter basically looks the exact same. So the companies I buy in the first week of the first quarter, well, I'm looking at those the first week of the second quarter. And then I look at them the first week of the third quarter, and I look at them again the first week of the fourth quarter. So KMI, I will look at it 4 times a year. Okay? Clorox, CLX, I'll look at that 4 times a year. I'll open up the chart and I'll take a look. Where's the high? Where's the low? Where was it? Where is it? What direction is it going? And more importantly, how much am I making? What do I mean by how much am I making? Well, here is the information on the stock. Okay? The open, the high, open, the high, the low, the close or the last trade, okay? The bid, the ask, the volume. That gives me all the information on the stock. Well, certain information. Now, Just below that is the option chain. 9 August 24, okay, 9 August 24 expires this Friday. 16 August 24 expires next Friday. 23 August 24, well, that's 3 Fridays away. So you decide what you want to do. If you like Walgreens, well, right now, first thing in the morning, to buy it, the price is $10.95. The closest strike price is going to be 11. Okay, the 11 for this week, 17 cents, which is 1.55%. Okay, the 11 for next week is 34 cents per share. That's a little over 3%. So that's 1.5% each every week. So why wouldn't you want to invest in Walgreens? I'm not telling you to. Okay, what I tell you here, I would appreciate if you just ignore everything I said and do your own research. Do you like Walgreens? Okay, what's the high? What's the low? What's the open? What's the close? What's the average movement? Okay, is it worth buying it at 11 and then selling somebody the option to buy it from you for the exact same price you paid and then making 1.5% for the week? Or you can sell next week's and make 3%. Totally up to you. All right, that's Walgreens. Let's find something else. Yeah, but Flipper, it's always going to be about the numbers and what they look like. A nickel, NASDAQ 100. Sorry, I don't do that one. Nice list of puts. Anik, I don't do puts here with this trading strategy. Now, this trading strategy here was created for my 9-year-old daughter back in '08. It had to be simple. It had to be safe. It had to be predictable, consistent, and no way that she could lose. Okay, so I came up with 5 rules. 5 simple rules, really not that difficult. Do not make it more complicated than it needs to be. Rule number 1, never buy something you do not want to hold long term. Rule number 2, never sell at a loss. It kind of defeats the purpose. Rule number 3, make sure the company has consistent increased dividends. Okay, shortcut right to the profitability. If they are profitable, they are going to increase their dividends to the shareholders. If they're not profitable, they will not increase their dividends. Okay, I like 20 years personally. Okay, 20 years of increased dividends is only about 300 companies that offer that. Now, if you want to drop it back to 15 years or 10 years, well, you're going to have a lot more companies to choose from. Now, however much money you think I got, I don't. I can only do a certain amount per week. So each account I have has anywhere between 4 to 6 positions. That's it. That's it. So 4 positions, 25%, 25%, 25%, 25%. 5 positions, it's 20%, 20%, 20%. 98% of my money is invested at all times, because why wouldn't I want it invested? What am I gaining by leaving cash just sitting around? I'm not gaining anything. Now, if you've been doing it as long as I have, well, you know what to look for. You know the shortcuts. And yes, I've seen bull markets. I've seen bear markets, okay? And yeah, this strategy does work very nicely, because what am I doing? I'm buying good quality companies that consistently increase their dividend payments to the shareholders. And that's what I am. That's what you are. You buy and sell stocks, you are a shareholder. Okay? Now you have 2 different companies you can choose from. Those companies that take the profits, invest it back into the company for capital growth. If that's what you're looking for, you're in the wrong place. This isn't for you. Okay? I do not look for capital appreciation. I look for the second group, the companies that share their profits. Now, by sharing the profits, I get cash flow. And I like cash flow. I'm 60. I'm retired. I only have a certain amount of money to play with, and that money gives me an income that I live off of. Okay, SMCI, have you taken a look? Oh, I hate it when people do that to me. Give me something, and then I have to break the bad news for them. SMCI. All right, super microcomputer. Okay, so super microcomputer number 1, it's at $616, way out of my price range. Okay, I stop at $250. So if you like this, we'll take a quick look at it. But before I go any further, I want to go right to Yahoo Finance and push in SMCI. Super microcomputer. first thing I want to take a look at, they have no dividends at all. Well, that was quick. That's a no. Why would you invest in a company? Okay? Why would you invest in a company that doesn't share their profits? Now, you might be looking for capital appreciation. Buy it at $608 and have it go up. Well, bully for you. Okay? It just doesn't work for me. So that's a no. Sorry. Okay, SMCI is going to be a no because it's just out of my price range and it doesn't have dividends. Okay, John Ra, hello, and how are you today? KB, how's it going? Alvin just showed up. Alvin, how are you today, Mr. Alvin? All right. Hey, Dina Linden. Dina Leiden? Denali? I have. You told me how to pronounce it a couple of weeks ago and I forgot. Sorry. Mikey G's here. Hi, Mikey. Levelange, do you think Bitcoin is going to be our new reserve? Oh, it would be awesome if it does. If it is, I would, you know what? I don't trust bureaucrats as far as I can throw them. Okay? If they have a way to screw us, they'll figure it out. Okay? So, if Bitcoin can get the, what do you call it, legal tender status, and you can actually go to McDonald's and buy some, buy a burger with your Bitcoin, or go get a coffee with it, or fill up your gas with it, or pay your mortgage with it, great, fine. At this moment in time, it's not. So at this moment in time, I'm just on the sidelines watching. Mark, ooh, missed that one, Mark. I have to go backwards. I find higher premium. Okay, wait a second. I gotta go backwards until I find it. How far back was it? All right, here I am. Okay, Mark, thank you, James, for showing WBA own over 750 at $12.50 a share and buying more. Okay, Mark, that's a great plan. Not that I'm encouraging you, okay? What I'm encouraging is you do your own due diligence and make sure you're okay with owning it. Now, if you own some at if you own 750 at 12.50 WBA. Okay, so 12.50, yeah, you're way up here, and you're down here. All right, so if you start buying tomorrow, hypothetically, if you start buying tomorrow at 11, that's going to bring your dollar cost average down to somewhere around 11.75, maybe 12. Might make it a little easier to get rid of. Now, yeah, the 12.50s aren't doing anything. Neither is the 11.50s. But the 11.50s next week. Ooh, take a look at the 11.50s next week. 16 cents a share. Cool beans. That's over 1%. That's what we're looking for. Okay, Nickel Dorpal. Dorval? Okay, NASDAQ. I don't do NASDAQ. Okay, Derek. Just had one of your impersonators contact me. Almost same name, but left out the third D dividend. Yeah. You're going to find that there's 27, okay, impersonators, scammers, whatever you want to call them. Okay, so here's the thing. One, I don't do cryptocurrency, not yet. Until cryptocurrency becomes legal tender, I'm just watching. All right. I don't like to buy something I cannot use. And what can I use Bitcoin for? I can use it for some things. But nothing here in the U.S. and I can't pay my electric bill or my phone bill. I can't put gas in my car with cryptocurrency, not yet anyway. Doc's here. Everyone say hi to Doc. Yo, Doc. Hey, Doc. Did you see what happened today? Okay, we made a whole bunch of money today. All right, today and yesterday. I was going over the numbers yesterday. It was like 2% just yesterday, and today I think it was another 2%. So we're up 4% this week. Okay. All right. Yeah, so as I was saying, you're going to find that you may probably be contacted by an impersonator pretending to be me. I find it a little flattering, okay? Not quite up to the standards of, I forgot his name. There's another guy here who does cryptocurrency, and he has a whole bunch of people pretending to be me. You know, the funny thing is some of these guys pretending to be me actually do a better job of being me than I do. Weird. Johnny, thoughts on DR? Johnny, I've never even heard of DR, but let's take a look at it. DR. Darwin Professional Underwriters. Okay, very first thing that pops up is instrument DR has no options. So, sorry, dude, that's going to be a no. Okay, Rion Fit 25. First time investor here. Which 3 stocks should I invest in? Okay, Rion Fit 25. I honestly cannot tell you that. I know absolutely nothing about you. I'm not a financial advisor. Okay, I'm not a money manager. I have no licenses whatsoever other than the license to drive a vehicle. That's it. I have a driver's license to drive a car. That's it. Nothing to do with finances whatsoever. I'm just a guy who got fed up with the crap I've been fed, found a little, I don't know what you want to call it. But when my 9-year-old daughter wanted to learn how to trade like I was doing, I had to come up with something that was simple, safe, predictable, consistent, all that kind of nice stuff, so that she wouldn't lose any money. Okay? This is what I came up with. Buy only good quality stocks. Consistent increased dividends is a must. Because if you take a look at all the paperwork that they shovel out every single year, quarterly reports, annual reports, conference calls, press conferences, you look at all that crap. You could, and you can spend hours and hours reading through all that crap. Or you can cut all that crap out, take a look at the dividends. The dividends is nothing more or less than the share of the profits by a well-run company. If the company is well-run consistently, year after year after year, well, it only makes sense logically that the dividends or the profits going to the shareholders increases every single year. So if they're increasing every single year, I'm not even going to bother with the annual reports. I have no desire to see them. Okay, my major concern is, are they consistently profitable? That's it. Are they consistently profitable? And do they have 20 years of history of being consistently profitable? Well, if they increase their dividends every single year, well, that's kind of like a yes. Okay, so if I give you my money and you give me a portion of the profits, and every year you give me a little bit more, a little bit more, a little bit more, well, hypothetically speaking, you got to be profitable. So if you stick with just companies that increase their dividends consistently, great. There's about 300 of them that have 20 years of history of increasing their dividends, and those are the ones that I want to take a look at. Okay? Johnny, DRMA. Really? DRMA. I could always say, never heard of them. Now, when I say I never heard of them, it's usually going to be a no. Look, no options. Okay, what's my requirements? My requirements are 20 years of increased dividends and weekly options. Johnny, it's really not that difficult. 20 years of increased dividends and weekly options. There's no options here, so it's a no. How am I going to make weekly income from this company consistently and predictably? Okay, I'm basically stuck watching the charts, seeing what the chart's going to do next. Sorry, that's not a game I want to play. User 7970, do you sell longer dated calls when VIX is this elevated, looking in the higher premiums earned? Well, that's an excellent strategy. It really is. But you're missing something so elementary. And here's the difficulty. Here's a challenge that most adults have. Okay, most adults want to think that they're smarter than an 8 or 9-year-old, which is probably true. But with all that knowledge you gain over all these years, you have a tendency to make things more complicated than they need to be. Okay, so stop making it complicated than it need to be. If the company is profitable, great. Okay, if it is, take a look at this. If it's at the high of the year, no. Okay, I don't buy at the high waiting for it to go higher. I don't do the game. Okay, waiting to go higher. No, sorry. At this moment in time, AT&T, this is what I'm looking at, AT&T has never seen 25. Not this year anyway. So why would I want to buy it hoping it goes up higher? No, I want to buy it when it's somewhere in here because the bottom is at 14. The top is at 19. Well, I want somewhere in the middle because it's already been here. Okay, so when you're blazing a trail through the forest or through the jungle, why would you want to blaze a new trail? Wouldn't you want to go on a trail that's already there? I mean, It's already been at 15. It's already been at 16. Look at this. It's been at 16 and a half and 17 and a half for about 6 months. Okay, right in that little tight area. That's where I'd like to be. Someplace where it's been. It's like familiar territory. Comfortable pair of shoes. However you want to look at it. I don't like blazing new trails. Sorry. Peter Cerno, how you doing? So anyway, use your 7970. Yeah, I try not to make it more complicated. Now, I do like the VIX. The VIX is great for what it measures. But what does it have to do with the consistency of increased dividends by certain companies? It only tells us how volatile the current market is. Well, the current market is 9,590 some odd stocks. That's a lot of stocks. What am I looking at? Well, I'm looking at 2 or 3%. I'm looking at about 300 companies. That's it. But this week, what am I looking at? I'm looking at anywhere between 5 and 15. That's it. Because I take my calendar. Okay, I take all my stocks and I put them into the calendar. All right. So this week we're in August. All right, we're at August 6th right here. So look what's coming up this week. Okay, Citigroup, Eaton, LVS. Is that Las Vegas Sands? Las Vegas Sands, Metropolitan, NEP. What the hell is NEP? Damn it. NEP. Nextera. Okay, Nextera. Ford, Intel, KBH. What the hell is KBH? Isn't that something Homes? KB Homes, yeah, okay. British Petroleum, IBM, Siri, Visa, Wells Fargo. All these companies right here. That's all I want to look at. I don't want to look at Target. I don't want to look at Marathon. I don't want to look at Philips. I don't want to look at Johnson & Johnson. I don't want to look at anything else except for these companies that are up for consideration this week. Okay? Now, this is just one of my lists. I actually have a whole bunch of them. Okay? These are all my lists right here. Okay? 100-year-old companies, dividend aristocrats, dividend champions, dividend contenders, dividend kings, Warren Buffett's list, my old list. Now, this list here I've been working on for a very long time. This is what you're looking at right now. Okay, Phillips 66, Wynn, Chevron, Alcoa, Apple, Capital and Finance, ConocoPhillips, U.S. Steel, companies you've actually heard of. Okay, that's all I do. Companies you actually heard of. They call blue chip stocks. Well, if a blue chip stock, companies that are over 100 years old or over 50 years old, okay, once you get past 10 to 20 years, well, it's pretty much easy after that. Most companies go bankrupt within the first 3 to 5 years. So why would I look at a company that has dividends for 5 years? No. 10 years, yeah, was it 1 out of 1,000 make it to 10 years? 1 out of 100,000 makes it to 20 years? What is your position for this week? Andonik, how are you today? Well, Andonik, I have about 6 accounts. I only share, well, I just started sharing the third one. So I shared 3 of them with you guys. Let me briefly tell you what I got this week. Okay, so this week, AEO, Bitto, Kohl's, MPW, Walgreens, and Wynn. Okay. This one, CVS, Ford, Kohl's, Mara, MPW, and Walgreens. Advanced Auto Parts, Dell, Ford, Macy's, MPW, and Walgreens. Well, those are my positions for these 3 accounts that I share with you people. Okay? Now, I have 4 other accounts that I don't share here. Okay, these accounts here, safe, predictable, consistent, 1% per week is what I'm looking for. That's over 50% per year. So if I'm sharing this with you for free, okay, and you can make up to 50% using this strategy, just imagine what kind of strategies I have that I don't share with you guys. That's what we do in the morning trading group. All right, live, wild, okay, cool, Barksdale, cool bean. Who pays the premium? Hey, Mima, how are you today? Well, Mima, the world is full of people. We all have different views on just about everything. Religion, politics, fame, fortune, family, health, you name a topic, we all have a different idea what's going on with it. So here, the people that I'm looking for are those that want to save predictable consistent income, not looking for capital appreciation. Now, when you have the options, buyers and sellers, okay, there are people out there that like to buy stock options, and you have people that like to sell stock options. You have people that like to do naked calling, and people that like to do cash secured positions. Everyone's different. So here's the thing, Mimo. If these numbers here, the bid and the ask, okay, these are options down here. Up here is the stock. Now the stock has the bid and the ask also. Okay, there's a person called the market maker. Let's think of him as the grocery store, the corner grocery store. Okay, 7-Eleven, Quick Mart, Circle K, whatever store you have down around the corner, however long, everybody has a corner store. Okay, you may have to travel further than others. Our corner store is walking distance. Okay, it's a Quick Stop, I believe it is. But think of the Quick Stop or Circle K. There's somebody there that owns the store. There's a store owner. The store owner is a market maker. The store owner will go and buy a gallon of milk for $3 and sell it to you for $3.50. He's the market maker. He makes the difference between what he buys it for, okay, and what he sells it for, right here. So the bid is what the market maker buys it for, and the ask is what he sells it for. So the market maker is making the difference between the bid and the ask. Now here, AT&T, see the bid, $19.11, the ask, $19.18. That's a 7-cent difference. 7 cents. Now you may think 7 cents is not a lot of money, but here's the thing. You're gonna like this. You ready? So 7 cents is the spread between the bid and the ask. Now the market maker gets 7 cents for each share that crosses his fingers. 33.775. 33,775,000 shares changed hands today. Okay, so let's multiply that out. 33,775,980. That's a lot of shares. Well, how much did the market maker make today? $2.3 million the market maker made. Okay? Now, if you're thinking you want to be a market maker, think again. Last time I checked, like 15, 20 years ago, it was $350,000 for the application fee. Become a market maker. And then I think you have to be on the floor for a certain period of time and understand how the game is played. So you imagine that, like it's probably close to $500,000 now, just to be the market maker. And what is your job? Your job is to buy and sell. That's it. Okay, now you have a market maker for the stocks, and you have a market maker for the options. They're probably not the same person. Now, for the options, the 1950, 6 cents to 7 cents. So that's only a 1 cent spread. So the market maker here only gets 1 cent per share. And how many shares traded today? For that, we got to change this to implied, delta, gamma, blah, 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 volume. Oh, there we go. Volume and open interest. Okay, so the 1950. Okay, the 1950, 10,301 contracts. Each contract is 100 shares. So 10,000 contracts. We take this out two spots, and then move over 2 places. That's 1 million. Yeah. Is that right? Yeah. 1,030,000. Stock options, okay, for shares. Because this is price per share. 6 cents per share. So one contract is 100 shares. So 10,000 contracts, well, that's over 1 million shares. And the market maker made over $1 million today just on this right here. This. Okay, so when you're asking who buys the, who pays the premium, don't know. Isn't that weird? Because if the price is listed here, the market maker is required by law, part of the application process, you have to understand everything that comes and goes with it. So if the market maker advertises these prices, he has to fill it those prices. Okay, if you want to sell, you're going to get 6 cents. If you want to buy, you're going to pay 7 cents. There are a bunch of people out there that buy, that's all they do. There's a bunch of people out there that sell. Okay, I'm one of those people that sell. I don't buy options anymore. I used to. Okay, I made a lot of money once, a long time ago, until I started losing. So I just rather go for the safe, predictable, and consistent thing. Okay, Flipper, I am just asking if you have to hold. Is it better to let it expire or roll? Okay, Flipper, I understood the question the first time you asked it. Seriously, I did. And I'm going to give you the exact same answer I gave to you before. Okay? On Monday and Tuesday, we know what we're buying and why we're buying it. We do not know the exit until Friday comes. Now, Friday at 3 o'clock, I jump on to take a look at where all my positions are. What I bought it at, what did I sell, what's the current price, what is the current trend. These questions cannot be answered on a Tuesday afternoon. They can only be answered at 3 o'clock on a Friday. Okay, I will quote one of our favorite presidents, John F. Kennedy. We cannot answer the questions of tomorrow with the information we have today. So, again, real estate flipper, I cannot give you the answer to that because Friday will give us answers to questions that you're asking. Okay? Is it better to let it expire or to roll? I won't know until Friday comes, and each position is its own entity. Okay? So if it's like 1 or 2 cents out, and if I buy it and roll it forward, I can make a decent profit, well, great, I'll do that. If it's better for me to let it expire and then sell it on Monday, if I get a better fill that way, well, fine, I'll do that. But I can't answer those questions on a Tuesday afternoon. I have to wait until Friday. Walgreens down 50%. Be the Goat VI. Now, I'm not quite sure how you can possibly say Walgreens is down 50%. Yesterday, she opened up at 11 and closed at 10.72. That was yesterday. Today, she opened up at 10.72. Isn't that what it closed at yesterday? And closed at 10.91. Well, correct me if I'm wrong, but when you open low and go higher, how can that possibly be 50% less? Okay, it's not down. Well, it depends on what you're comparing it to. I'm comparing it to yesterday. Okay, compared to yesterday, well, today's up. All right? If you want to compare it to the high of 5 or 10 years ago, well, yeah, it's down. It all depends on what you're comparing it to. Now, I'm not looking to do trades from, years ago. The longest I've ever held anything was 9 months. So if I'm taking a look at Walgreens, my only concern is where is it going to be in 5 days? That's it. I jump in on Monday. I would like to be out by Friday. Okay, if I don't hit my target on Friday, I will take it next week and I'll do the exact same thing, looking to get out next Friday. Does that always work? No, it doesn't always work. I had to carry a couple of companies last year, Target, PPG, I had to carry them for 6 months. Kimberly-Clark, I carried for 9 months. The longest I've ever had anything this year so far was AEO, okay, American Eagle Outfitters. Funny thing is, I'm into it like 28, 29, and now it's down to, well, let's just pull it up. AEO. Okay. So AEO, I was in it at 29, okay? I dollar cost averaged. Now I'm down to about 23. Okay, so my average price now is $23.65. The only way you can decrease your entry price is by dollar cost averaging down. All right, so by doing that, my price now is $23.65. So this week, I sold the 21s. Okay, so if my purchase price is way up here off of this chart, and the stock is way down here, I sold the 21s. Well, that's a hell of a lot less than what I paid for it. Okay, so why? Well, 'cause I don't see it hitting 21 by Friday. So that premium I'm going to collect, and more than likely, hypothetically speaking, it should expire worthless. So I just bring in that 1% for the week and say, all right, great. The stock is down from where I bought it, but am I going to sell it? No, because I have a couple of rules. Never buy something you don't want to hold long term. I got no problem holding on to AEO. I don't. Okay, it's down from what I originally paid for it. Okay, fine, but I'm still making my 1% every week off of it. So I don't see the problem there. And I don't see Walgreens as being down because I play 5 days at a time. Okay, I don't look at, hey, what's the highest it's ever been? I don't look at it that way. What was it in January? I don't do that because I'm not thinking of buying it in January. I'm thinking of buying it now. Now, Walgreens, WBA. If you take a look at the chart, all right, the high was 30.19. Well, that was a year ago. Now it's down to 11. Well, that's not 50%, that's 60% down. Okay, you were at 30, now you're down at 10. That's 60% down from the beginning of the year. But the last 30 days, okay, 30 days ago, we opened up at 11.12, right? 11.12. Okay, right there. 11.12, that's where we opened up 30 days ago. Well, where are we compared to 30 days ago? Well, we're at 10.91. Well, what's the difference between 11.12 and 10.91? That's only like 20 cents. I don't consider that down 50%. Sorry. I buy and I sell. I don't hold on to anything. That's not what I'm doing here. Now, I will go into Walgreens buying it as if I was going to hold it for a long period of time, but I don't want to hold it for a long period of time. I want to make a safe, consistent, predictable 1% per week. And if Walgreens is going to give me 1% every single week, well, then why the hell not do it? That's just my personal opinion. Okay, be the goat. Okay, I hope that worked out. Pillar, how are you today? Well, I got 71 questions. I find premiums are higher by not rolling. Every once in a while, Flipper, I find that too. But when I'm taking a look at rolling it, is rolling it going to give me 1% or more? Great. If it does, I'm perfectly happy with that. Now, you guys ask me a lot of times, well, why don't you go for higher returns? I could if I wanted to, but it means I'd have to sit in front of the computer to wait for things to move. I don't want to do that. I would prefer to go out and hang out with my 4-year-old grandson and go swimming in the pool. Boombot, nice to see you. Haven't seen you in a while. James, you said you never sell at a loss. How would you handle Intel? Well, here's the thing. Intel. Hold on. I had Intel. INTC. Right here. Here we go. Okay, so here's Intel right here. All right. I don't have. What is it I don't have? I don't have the exact dates. But I made $1,700 on Intel. Let's go put INTC here. INTC. Intel. And then here's my trading on Intel. Account mitigated, okay, from, okay, blah, 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 whatever. Okay, so May 16th. Wait a minute. What am I looking at? Dates. Okay, that's all the days. All right. Whoops. All right, doing it by date. Okay, first time I bought it was in April 29. I bought it at $31.25. I sold the 31s, got 66 cents. Now you can tell that's over 1%. Okay, great. I bought it again here at 31. Sold the 31s, got 43. Again, over 1%. Intel again, bought it at 30.47. Sold the 31s. This was a nice one. Sold the 31s for 32, which is over 1%. Plus, I get the difference between the 30.47 and the 31, which is another 53 cents. Okay, again, but these are the trades I've made so far this year on Intel. Okay, so it always comes down to the numbers. So at this moment in time, what would I do with Intel? INTC. Okay, let's record this one for the fun of it. Okay, at this moment in time, we're looking at Intel. Well, great. Where is it at the moment? At this moment in time, it's at 1971. Great. What can I sell it for? An education. Okay, Boomba, here we go. Now, Boomba, I honestly find it rather strange when people want to argue facts. Okay? When I say arguing facts, well, fact, last trade was 1091. Fact again, the bid is 1088. The ask is 1095. You don't believe me? Fine, go look it up yourself. That's what it is. All right? Hey, Rich Bruner, how you doing? So, that being said, if tomorrow morning this is the buy price, 1095, and I buy it at 1095, Felix, hey James, how you doing? If I buy it at 1095 and I sell somebody the right to buy it from me at the closest strike price right here, 11 is $17. I mean, sorry, 17 cents. 17 cents per share, which is $17 per contract. Okay? $17 per contract. Now, let's bring up the calculator, because apparently someone doesn't understand the math. Okay, so 17 cents is what? 17 cents per share. Okay? And its purchase price is $10.95. So if I'm dividing it by my purchase price, $10.95, that comes to a grand total of, I'm having a hard time seeing these numbers. Can you guys help me out? 155. Oh, that's 1.55. That is 1.5%. Okay, I'm not quite sure why you don't think 1.55 is not 1.5%. Okay, so I'm going to ignore you for a while. All right. Let's go back a couple of questions that I missed. Right. What you on stocks or crypto? I don't do crypto, sorry. Aisha, sir, if I click on your profile and follow the links, is that you? Yeah, but here's something right here. How about we do this? Hold on one second. I might do this. Reply, there you go. Hey, it's me. This is my link to me, and you can follow this link to me. And I send it. There you go. How's that? That way you know it's me. All right, where was I? Dum. Ooh, GD wants to look. Ooh, wow, I'm missing all these. HE, uh-oh. Medina, does it have to be at its low point to buy the stocks 2 weeks before the dividend, or buy regardless? Oh, that's a good question, Medina. Here's the scenario, okay? You can buy it anytime you want. Me personally, I like to buy it after it comes off of a 30-day high, okay, and a 30-day bottom. So if it hits a 30-day bottom and starts moving back up, that's where I like to jump in. I don't like to jump in when it's almost to the high, because it doesn't make sense, because when profit is there, it's going to be taken. All right? So from here 30 days ago, bottom was 1076. Okay, she jumped up to 12. Okay, so from 1076 to 12, that's what, 1 1/4? Okay, about $1.25. Now it doesn't sound like a lot, but 1 1/4 on a $10 stock, that's 10%. 10%. So if the stock goes 30 days ago, jumps up 10%, now I'm just letting you know, I'm an investor. If I see something jump up 10%, yeah, I want my profit. Hell yeah, take my profit. So she drops back to 1080. Now from 1080 to 1220. Okay, so as I was saying, from 1080 bottom here to 1220, well, that's a $2. Well, that's about a $2 jump. That's a 20% jump. What software is this? This is Thinkorswim. Okay, you can download this for free, thinkorswim.com, and it's through Charles Schwab. They'll let you use it for about a month or two for free. Do some paper trading, get used to it before you put real money into it. Yeah, but this is what I've been using this one for about close to 20 years. Okay, Tom Sosnos created this, then he's turned around and he sold it to TD Ameritrade. TD Ameritrade got bought out by Chucky. All right. So, ask yourself a question. The company jumps up 10%. Are you going to take profits? I am. She drops down. Second time, she jumps up 20%. Are you going to take profits? I am. She drops down again. Here's where we are. It's below the 30-day bottoms. And you got a gap here. So what happens with gaps? Gaps have a tendency to fill. So, that being said, Felix, James, do you look when there is earnings that can make stock price go up and down? All right, Felix, you will find, the longer you're playing this game, earnings have very little to do with stock movement. I've seen positive earnings where stocks go down. I've seen negative earnings where stocks go up. It's not predictable. It's not consistent. So why would I worry about it? All right. More questions. SMCI, I'm not doing that again. Do you care about Dell? Chama Sexy, Dell. I actually own some Dell. Okay. Now, interesting thing about Dell, let's take a gander at it. Hold on. Dell, right here. Okay. I first jumped in at 128. Okay, see that price right there? 128.86. Okay. A dollar cost average at 91. Now, my dollar cost basis is 109. Now, and I sold the 100 calls this week for 110. If my cost basis is 109 and I sell it for 110, well, that's more than 1%, right? So I'm getting my 1% on Dell. You think I'm going to sell it at a loss? Hell no. Okay, let's take a look at Dell. Oops. Okay, so a year ago, Dell is sitting at 54 bucks. Look at it, way down here, 54. She doubles, triples, quadruples. Okay, she goes up 400% at close to 400% at 180. That's the top. Okay, so from 180, she drops and drops and drops. Yesterday is a 30-day bottom. Now, I want you to take a closer look at this. Okay, 30 days ago, we opened up at 142 over here. 2 days later is our 30-day high, 150. Okay, 150 on a $54 stock, well, that's 300%. 100% is double. Okay, that's at 100, 150, triple. Okay, so it's triple. Okay, so it tripled. All right. Now from there, she drops all the way down to 90, which means she loses 50 bucks, which is 30%. So she just dropped 30%. Now take a close look at the last 30 days. All right, the last 2 weeks. Thursday to Friday, she gaps down. Friday to Monday, she gaps down again. Makes a new 30-day bottom on the 5th at 90.13. Okay? Today, the low is 93.34. That's 1 day to the upside. What do we have for Dell? We have one gap down and another gap down. Now, if you know anything about stocks, okay, when it looks like this, especially on a company like Dell, we're not talking about Joe's Pizza or Sally's Seashells. We're not. This is Dell. This is a household name brand. Okay, a lot of people heard about Dell. So, two gap downs, yeah, those are going to fill. So yeah, of course I bought some. Okay, I sold the 100s. So as long as she's below 100, I'm fine. Okay, she's probably going to be above 100, but I'll end up buying those back. So that's my thoughts on that. Friday at 3, will you get your answer? Yes, I will. See, the funny thing is, it's like when I jump in on a Monday and I take a look at a stock such as Dell, I take a look at the odds and probabilities. Well, a 30-day bottom here, 2 gap downs, yeah, that thing is going to move back to the upside. Of course it is. Gaps have a tendency to fill. Haishi, HE, is that Hawaiian Electric? That's going to be a no. They stopped paying dividends after the what do you call it, the fires. So until they get back on track, then we might take a look at them. But it's just a waste of time to take a look at Hawaiian Electric. Sorry. Fonz 21, Walgreens and CVS will eventually go out of business. Well, okay, thank you for your little tidbit of foresight. I'm not quite seeing it that way. Okay, both of those companies, Walgreens and CVS, are both over 100 years old. Could they go out of business? Yes, they could. But here's the thing. There's a Walgreens and a CVS in every major city in the United States, some of them across the world. Okay, Walgreens has 8,700 stores because they're closing up 25%. Okay, fine. They get rid of the bleeders. What are they going to do now? Well, people still like to get their prescription drugs from the local pharmacist. A lot of people like to go in and actually talk to the pharmacist when they're getting their prescriptions filled. Now, you're talking about a generation. You got the baby boomers, then you got Gen X. Okay? The rest of the generations after that, the millennials, the Gen Zs, and whatever the new generation is, the numbers just don't compare. Okay? And you guys aren't on drugs yet. We are. So we need our prescription drugs. Where are we going to get it from? Walgreens, CVS, Walmart. That's it. And we want to. See, my generation likes to go in and talk to someone. Talk to the pharmacist. So, yeah, I don't see them going out of business anytime soon. Sorry, Fonz. Angeloc, thoughts on SMCI? Yeah, it's going to be, however many times you want to ask me about SMCI. No, 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 hell no. I don't know why you want to keep looking at SMCI. They don't pay dividends. Why would we look at them? Okay, the name of the channel is Dividend Investing for Cash Flow. Why are we looking at a company that doesn't pay dividends? All right, GD, Nike. I like Nike. I actually have some Nike. Nike. Alrighty, a year ago, Nike's at 110. Ended up the year with a triple high at 123. That's the high of the year. Uh-oh. Let's do a video on Nike. Draft. Next. 60 seconds. And here we go. Whoops. All right, we're going to take a quick look at Nike. Right now it's trading for 72.36. The 72s are going for 122, close to 1%. The 73 is going 67, not quite 1%. Okay, a year ago, 110, topped off with a triple high at 123. That was end of December last year. Had a big drop on the 28th of June. Other than that, she's just been going kind of sideways. Look, down, up, down, up, down, up, down. Where do you think it's going next? Come on, elementary school kids can tell you. It's like a seesaw. Down, up, down, up, down, up, down. Well, she's going to the upside. But here's the thing. The 30-day bottom is right here, yesterday. Well, today's 1 day to the upside. I personally like 2 days to the upside. So if we have an update tomorrow, well, it's a yeah. Jump on in. Okay, highs, I can't even read that. H-E. Okay, not quite sure what H and H-E is. Okay, so H is a no. Sorry. H-E, Hawaiian Electric, I'm pretty sure. Yep. Hawaiian Electric. Oh, yep. That's going to be a no also because they cut their dividends. Why am I looking at a company that doesn't have dividends? Because when, it's not an if. Okay, so when you buy a stock, okay, you're going to find you buy a stock, it's going to go down. Well, of course it is. You're also going to find you're going to buy a stock and it's going to go up. course it is. That's all they do. You're also going to buy a stock and it's going to stay flat and go absolutely nowhere. Well, of course, it only goes 3 directions: up, down, and nowhere. So, what are you looking to get? Well, we're here for safe, predictable, consistent income. And the only way we can do that is with companies that have weekly options. Hawaiian Electric, it does have weekly options. But you know what it doesn't have? It doesn't have any dividends anymore at this moment in time. Okay? So, let's keep on trucking. What else do we got? Marcel, scam artist, cool beans. I'm glad I can help you out there, Marcel. GD wants to take a look at Mara. M-A-R-A. Marathon. Now, I do own some Marathon, just to let you know. GD also want to look at Bank of America. Cool. Bank of America has been in business over 100 years. They ain't going anywhere. Okay, so Marathon. Marathon, M-A-R-A. Last trade was 17.25. 16.91 is the bid. 17 is the ask. The 17 strike price. That cannot be right. Seriously, it can't be right. The $17 strike price is going for 72 cents. Well, next week it's going for 114. Well, what's the chart telling us? A year ago, 1556, bottomed out at 728. Top of the year was 34. Okay, so she drops last 30 days. Here we go, last 30 days. Okay, 30 days ago, we're at 2028. A week later, the high, 2730, and then she just drops. The 30-day bottom yesterday, 1366. Today we're at 17. I love a 30-day bottom, especially coming off of a 30-day top. I just love it when a stock has a 30-day top over here, okay, 2730, and then 3 weeks later, we have our 30-day bottom at 1366. Okay, that is almost a 50% drop. What do you think is going to happen at a 50% drop? Come on, you got investors like me that have been playing this game for a long time. We see a company like Mara drop 50%. Well, hell yeah, we're going to be all above that. See, today is an update. One more day is 2 days to the upside. That's where I like to jump in. Right now, she's at 17. And the 17s are going for 72 this week. Well, that's way over 3%. Next week, it's $1.14. Well, that's way over 4% or 5%. Why wouldn't I do something like that? So, I actually own some Mara, so I'm okay with it. All right, that being said, I like Marathon. I do. Now, it's not a recommendation that you buy it. I'm just saying that I like it. All right, so what are we doing next? All right, so next, Bank of America, BAC. Next one up for consideration is Bank of America, BAC. Well, first thing I want to take a look at is the chart. Look, the high of the year, the low of the year, where was it? Where is it? Where is it going? To the downside. It was at 44. Now it's down at 36. But look at the bottom. The bottom's way down here at 24. It's got a long way to go. So do I like this right here? Well, last 30 days. Here we go. Last 30 days. 30 days ago, we're at 40. Then we jumped up to 44. From 40 to 44, that's a 10% increase. Look at the numbers, 10% increase. Hell yeah, I want to take my profits. You take your profits and go from 44 down to 35. Look at that, 35.06. Okay, so from 35 to 44, that's $9. $9 on a $40 stock, that's a 20% drop. 20% drop, hell yeah, I want to jump in on that one. Why not? Okay. So we got a 20% drop here from 44 to 35. Great. The last trade was 36.92. 36.80, 36.82. What does that tell you? That tells you the market maker is going to drop it some more. Anytime you have the bid and the ask lower than the last traded price, market maker is going to push it down. Okay, so he pushes it down, great. So I'm looking at the 37s. The 37s going for 47. Great. Do I like Bank of America at 37? There's your question. It's giving me over 1%. If I do it for next week, the 37 is giving me 79, which is over 2%. Still 1% per week. I like 1% per week. I can deal with it. Now let's take a quick look at seasonality. Now seasonality tells me what does it normally do this time of year. Okay, blue lines this year. This is 10 years worth of average movement. Well, this time of year, she has a tendency to go down. So why would I want to buy it? It's an interesting question. Ask yourself that question. If we're right here, and normally this time of year, well, for the rest of this week, she's going to go up a little bit for the rest of this week. Then from this week, next couple of weeks, she goes a little bit to the downside. Well, that's Bank of America. Ask yourself, do I like Bank of America? They've been in business for over 100 years. Okay, they consistently pay dividends. So, do you like it? Do you not like it? Interesting question. Okay, more questions, more questions. 86. Another person's asking about SMCI. You got to be kidding me. What is so great about SMCI? $600 stock. See, people got a hell of a lot more money than I got. I can't do, that many shares at that much. Cram my mouse. Okay, Intel announced they're suspending their dividend. Yes, I get that. Okay, yes, he keeps selling calls the following week. Yep. John, can you explain how the 30-day bottom specifically impacts how you trade? Well, I'm not quite sure that actually requires an answer. Because if you think about it, it's kind of a silly question. If your 30-day top is here, okay, 44.44, okay, your 30-day bottom's here at 35, that's a 20% drop. If you have a company that you like, especially one that's been in business for over 100 years, it drops 20%. Well, number one, Bank of America ain't going anywhere. I mean, you can check the numbers with Bank of America. The amount of money they have tucked away is just freaking ridiculous. Okay? But if she drops 20%, and here's your 30-day bottom right here, well, I tell you what, there can only be one 30-day bottom and only one 30-day top. So what happens at a 30-day bottom? Well, usually it goes up. So the question, John, you should be asking yourself, if you make money in the stock market by buying low and selling high, where do you expect the low to be? I mean, think about it. Okay, you can ask anyone, how do you make money in the stock market? Well, you buy low and you sell high. We got a 100-year-old company that just dropped 20%. Now it's one day higher than the 30-day bottom. Okay, because today's higher than it was yesterday. So if tomorrow is even higher, and you get two gap downs, one gap, two gaps. Gaps have a tendency to fill. So if you have a gap here and a gap here at 39, and we're currently at 35 going to the upside, what makes you think I can't collect 1% on that? What is 1% of a $37 stock? That's 37 cents. Think about it, 37 cents. That's all I'm looking for. Okay, so it seems, with the question you're asking, it seems that you're looking for a higher rate of return. If that's the case, you're in the wrong place. I'm looking for safe, predictable, consistent 1%. 1% of a $37 stock is 37 cents. So as soon as this thing hits 36, 37, 40, I'm out. Well, 30 days ago it was at 44.44. Dropped 20%, now let's go 2 days to the upside. Okay, so I'm not quite sure what do you mean by can I explain how a 30-day bottom specifically impacts my trade? Well, that's where I ideally like to be in. 30-day top, 30-day bottom. What happens after a 30-day bottom? Well, let's go back a little bit. Okay. This is 27, 27. Okay. So here's 30 days right here. All right? 30-day bottom. What happened? Well, stock went up. Came back down. Let's move over a couple of days. Okay? 30-day bottom. Stock went up. Okay, now I can do this all day long. Well, that's where we are at the moment. I love 30-day bottoms coming off of a 30-day top. All right, so let's go to the next question. I got 65 more questions. Holy cow. Okay, Sig, you like that one? Yes, until 11:30 every night. Okay. VYM, never heard of it. VYM. Vanguard. Yeah, no. Okay, monthly optional stock. I just can't make the same amount of money out of a monthly. You know what? Here we go. Whoops. Here we go. All right. Okay, here we're looking at VYM. Okay, the chart looks here. There's the high for the last 30 days. Actually, it's the high of the year. Pulled back a little bit, but look over here. It's a monthly optionable stock. Monthly optionable stocks just don't pay the same money. 118, well, what's the 118 going for? Well, it's going for 180. Okay, the next strike price up would be the 119. Well, that's going for 135. Well, that's over 1%. But here's the thing. I'm going to divide that by 2 because that's 2 weeks. And here's the thing. To make it matters worse, if I miss, I've got to figure out where it's going to be in 4 more weeks. So I have a challenge enough trying to get it from the next 5 days. You want me to figure out where it's going to go in the next 4 weeks? Okay, see, I'm not doing this for monthly income. Okay, no, I want weekly income. My bills come due every single week. The funny thing is, I don't get all my bills on the same day. All right. So yeah, so VYM, no, sorry. DeCast, why? Why? Allegheny Corp K, okay, yeah, that's going to be a no. All right. A monthly, sorry, that's a no. Next. Manifesting, way to go. Poseidon's last molar. Any guess why BRKB got hit pretty hard last week? AI stocks are recovering better. Now, I'm pretty sure BRK is Berkshire Hathaway. Yeah, that's not on my list. Avgo. What the heck is Avgo? AVGO. Broadcom, really? Okay. Broadcom's at 143. Or 140. What? Okay, market maker's pushing that one down. Okay, so let's look at AVGO. AVGO. Okay. Oh. Let's take a look at historical data. Because apparently somebody likes user 6569. Apparently somebody likes to collect 1.3% per year, which boggles my mind. Think about it. You're investing your money and the company only gives you 1% per year and you're okay with it. I don't know. Okay, they started paying dividends in 2010. Well, that's only 14 years of dividends. Now, do they increase? Okay, so 2010, it was 1 cent, jumped to 2, jumped to 3, to 4, to 5, to 10, to 35, to 18. That's backwards. They cut it in half in 2018. 27, 33, 36, 41, 46, 53. Okay, so they have 10 years? Well, they got 14 years of increase, of 14 years of dividends, not increased, because 2010 it was 1 cent, 2011 it was 1 cent, 2012 started out at 1 cent. That's not continually increasing. And then 2012 it was 2, 2013 it was 2, then they finally went up in 2014 to 3. Yeah, they're not consistently increasing. Okay, so if you like AVGO, good, more power to you. A year ago, we were at 89.67. Okay, let's take a look. we're taking a look at AVGO. A year ago, 88.76, bottom out at 78.61, topped out at 184, and now that was in June 18th after a gap up. Last 30 days, okay, last 30 days, we opened up at 170, got a triple top at 176.65. From there, we have our 30-day bottom yesterday. So from 176 to 127, that's close to a $50 drop. A $50 drop on a $175 stock, that's a big drop. That's over 20%. Okay, yesterday was an up day, but it was the bottom. Okay, today's another update. Tomorrow would be another update. Great, I love it. So what's the premium? 140. The 141 is going for 520. Hello, good evening, sir. Hey, someone, how are you today? All right. All right, so we're doing some calculations on AVGO. Okay, even though they only have 14 years worth of dividends, they're not consistently increasing, but they do increase. The 140.61 is the current price. The 141, well, that's 520. Okay, so let's get my calculator out. $5.20 divided by the purchase price, 140.61, and that comes to a grand total of 3.69%. That's almost 3.7. Now here's the thing. If she stays above 141, okay, I get to collect an additional 39 cents per share. Alrighty then, that's going to bring me up over 4% for the week if she stays above. Now, the question you got to ask yourself, do I like AVGO and do I like it at this price? Okay, so next, here we go. Next, Warren dumped Apple and BRK both dropped. Okay, well, let's take a look at Apple. Interesting. Apple is an interesting company. Let's take a gander at Apple. Whoops. We're going to take a quick look at Apple. Apple's sitting at 205.48. The numbers look like this. A year ago, 180. Bottomed out in end of April at 163. Wasn't that right when they had that that lawsuit over in Europe? They had to pay a big fat chunk. Well, there's the bottom of the year right there. From there, look at the incline. From the end of April at 167, she jumps all the way up to 236. That's a $50 increase. Might be a little bit more than that. So anyway, $50 increase on a $165 stock. That's a 30% jump. Somewhere, it's not exact, but somewhere around 30% jump. Okay, here's the top. 30 days ago, we were at the high of 237. Yesterday was the 30-day bottom at 196. The question we got now on Apple is, do I like Apple at the current price, which is 205.48? Well, the closest strike price is going to be the 205. That's $4. Well, that's over 1%. The 207.50s, well, that's over 1%. Here's a nice thing about Apple. Let's take a look at the seasonality. This will blow your mind. Okay? Now, here's your seasonality chart. Way over to the left, January 1st. Over to the right, December 31st. Blue line represents this year. This is where we are right here. Where this blue dot is, second week of August. Look at the chart. From January 1st to December 31st, nothing but up for Apple. Okay, from the beginning of the year to the end of the year, nothing but up. Nothing but net. Woo! All right, anyway. So, if you like Apple, ask yourself, do you like it at 205? Where's it going to go? That's an interesting question. Okay, yesterday was the 30-day bottom. Today's up. What do you think is going to happen tomorrow? Well, here it is again, a gap down. If you like to buy stocks at a low, sell it at a high, well, you can't get any lower than the 30-day bottom. Well, you missed it yesterday. Okay, today you missed it again. So tomorrow, if it's an up day, well, that's an invitation. What are you waiting for? The red carpet to be rolled out for you? You buy low, sell high. Apple, 30 days ago, at over 235. Yesterday at 196. Well, there you go. How do you choose what companies to focus on the week? Oh, that's a great question. User 7780. How do I decide which? All right, let's do this. The question is, how do I decide which stocks to focus on? Well, it's pretty plain and simple. The calendar. The calendar tells me. Now, I look at the Dividend Kings, Dividend Aristocrats, Dividend Champions, Dividend Contenders, and Warren Buffett's list. That's 300 companies that have consistently increased their dividends for more than 20 years. Warren Buffett's list is a little bit different because it's Warren Buffett's list. Okay, anything he buys, of course I'll buy it. But anyway, I choose my stocks that I look at on a weekly basis based on the calendar. Okay, today is the 6th of August. What am I looking at the 6th of August? This week right here. What do we have? We have Citigroup, Eaton, Las Vegas, Sands, Metropolitan, I forget it, Neptune, whatever it is, Ford, Intel, KBH, Wells Fargo, British Petroleum, IBM, Siri, and Visa. Why look at anything else? Those are the only ones having dividends this week. I don't look at anything else. Dum, 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 dum. Okay, so the reason why I only look at certain stocks on the week. Now, I look at over 300 companies over a 90-day period. 90-day period is 1 quarter. Felix, what do you look for on the 90-day chart? Do you look at the direction? Yes, I do, Felix. Now, each one of these dots represents a company that's ready to pay a dividend. Well, more specifically, each one of these dots represents a company that's going to pay a dividend that has increased its dividends every single year. There's only about 300 of them. Now, there's 9,598 companies in the stock market that I can look at it any single day. Why do I want to bother? If I look at companies that increase their dividends, it means they're consistently profitable. Okay, increase for 20 years, that means they've been profitable for 20 consecutive years. Why invest anywhere else? So hopefully that answers that question. Jack, can you shout out my cousin, please? His name is Dixon. Dixon! There you go. All right, Ford. Here we go. Ford. Okay, let's do this one more time. If we try. What? Okay. All right. Right now, I'm going to take a quick look at Ford. Look at the chart. Okay. A year ago, we're sitting at 1283. We bottomed out in November at 971. Topped out at 1485. That was in July. Big, huge drop. Take a look. Big drop. Yesterday was a new 30-day bottom at 949. Okay, we're talking about Ford. The company's been in business for over 100 years. I really don't think they're going anywhere. I think they're the only car company didn't take any money from the government. No thanks, we're fine. We don't need your handouts. That's what they said. Okay, so do you think Ford's going to go out of business anytime soon? I don't. Well, let's take a look at the numbers. At 959, the bottom was yesterday. 983, well, the 10's going for 5 cents. That's only 0.5%. No, sorry, the number just doesn't work. Okay, next week, 12, that's 1%, still 0.5% per week. No. Sorry, Ford just doesn't cut it for me this year. I mean, don't get me wrong, I bought Ford many times throughout the year. I've bought Ford many times throughout the year, but look, the numbers just don't work. Okay, 30-day high way up here at 14.50. She dropped down to 9.59. That's a $5 drop. A $5 drop on a $14 stock. Well, that's over 60% drop. Well, yeah, there's going to be accumulation down here. 60% drop on a company that's over 100 years old? Sure. But unfortunately, they're just not paying enough, 0.5%. Now, you might like 0.5% because 0.5% per week is 26% per year. And it's on a company that's over 100 years old. Now, this company's not only 100 years old, it's a worldwide icon. Ford has been around long enough, anywhere in the world, you could probably find a Ford. It's just the way it is. All right. Drazik, how are you doing today over in Instagram world? Okay, so that's Ford. Let's keep on rolling. 87. Come on, you guys keep hitting me with all these questions. Stanley's here now. All right. Let the party start. Stanley just got here. What is the name of your trading style? I like to call it Dividend Capturing 2.0. Okay, thanks for that, Manny. Diego, alrighty. Medina. Does it have to be at a low point to buy the stocks 2 weeks before the dip? No. No. Buy it where you feel comfortable, no matter what you buy. Okay, hold on. Let's do this one right here. That's a good question. Bum, ba-dum, bum. All right, the question we got at this moment in time, does it have to be at its low point to buy the stocks 2 weeks before the dividends? No. Or buy regardless? No, not at all. Now, when you buy something, okay, whatever you buy, whatever reason you have, it's rule number one, never buy something you do not want to hold long term. So you need to ask yourself a question. If this is what I'm buying it for, am I okay buying it at this price and holding it for as long as I have to hold it to reach my target? Now, my personal target is a 1% per week. So Ford went from $14.50 all the way down to $9.50. That's a $5 drop, which is a 60% drop. Well, it's here now. Well, what do you think is going to happen? Well, you got this gap right here, and gaps have a tendency to fill. So eventually, this is going to go up. When, how long it's going to take, don't know. Do I care? Kind of yes, kind of no. Rich Bruner, how are you there, Mr. Rich? Outstanding. He's not chasing dividend. Thank you, 86. No, I'm not. You buy 2 weeks before the dividend date or the pay date. Actually, the EX dividend date. Because worst case scenario, I would get the dividend. Now, here, let's do this again. I'm getting the hang of this shooting videos as I do this. Getting the hang of it. Okay, question we have was, do I buy 2 weeks before the dividend or the pay date? Well, it's going to be the dividend date. These little dots right here represents companies that have increased their dividends consistently. Great. Each one of these represents the EX dividend date. So if I want to collect the dividend for PSX, which is Phillips 66, they're paying their dividend on the 20th, which means if I want to collect that dividend, I have to buy it on the 19th, the 12th, the 6th, the 7th, 29th, the 1st, any time before the EX date to qualify to collect that dividend. Now, do I want to collect the dividend? Well, not really. I would prefer to get the premium coming into the dividend. Because if you take a look at these stocks here, any one of them, and you take a look at historical performance, specifically 10 days before the EX date. So 10 days before this is going to be the 6th. If I buy it on Monday, it's going to be the 5th. Okay, on target, it's going to be 2 weeks on the 5th. Ford is going to be somewhere in July. Okay, hopefully that made sense. Medina. Uh-oh, I missed some questions. Can you look at Ever? All right, Yeet. I have no idea what Ever is. But let's go take a look at Ever. EVER. EverQuote. Yeah. No. How's that? Quick, direct, right to the point. Monthly options, I don't like monthly options because I can only do, you know what? Let's do this. Make a video. Why not? I like making videos because sharing information. The powers that be don't want us to share information. Okay, we're looking at EverQuote, okay, EVER. Okay, it's going to be a note that has monthly options. Monthly options allows me to write a covered call once per month. Once per month only gives me 12 per year. Okay, so 12 per year as opposed to AT&T, which has weekly options, which means I can do it every week, 52 times a year. Now, here's a question. Would you prefer 52 checks averaging 1% per week, okay, it's over 50%, or would you prefer monthly, which is 12 checks per year? And if you're averaging between 2%, well, that's only around 24% per year. I personally would like weeklies because it's easier and the monthlies just don't pay. Can you look at Intel? We already looked at Intel. Sorry, Kenny G, we already looked at Intel. How about Merit? We already looked at Merit tonight. Going back up, I have no idea what he's talking about, but okay. Share the live. Be red today. Oh, that's what you're talking about. All right. Geraldo. Or is it Geraldo? I have no idea. Exxon Mobil. Let's take a look at Exxon Mobil. XOM. Interesting. Now, there we go. Do a video on Exxon Mobil. Plus, here we go. All right. Quickly, let's look at Exxon Mobil. XOM. A year ago was sitting at 107. The bottom of the year was in January 19th. That was at 95.83. Topped out at 123.75, and that was the beginning of April. All right. Look at this. Last couple of months. Up, down, up, down, up, down. Ooh, where do you think it's going next? Look at the last 30 days. Last 30 days, here we go. 30 days ago, well, not quite, but 28 days ago, we got our bottom at 110.40. Now, from 110.40, she jumps up to 119. That's a $5 move. Well, $5 move on a $100 stock, well, that's only 5%. Nothing drastic. Pull back, shoots back up. Now we have 5 days to the downside. Yesterday was the bottom. Okay, today was a little bit higher. So what happens? Up, down, up next. That's what's coming next. Yeah, I'm getting good at this one. Okay, so we're looking at it going to the upside next with ExxonMobil. Great. At 114.16, that's the current price right now. So the 114s are going for 140. Well, that's way over 1%. Next week's 114 is going for $2. Okay, that not quite 2%. I would do this week's, hopefully get out this week, and then take a look at next week to see how the numbers look. So what does this stock normally do this time of year? For that, we use seasonality. There you go, seasonality. What usually happens for ExxonMobil? Well, at this time of year, you can see the chart. She's going to go up for the rest of this week, and then she's going to dip next week. Okay, that's historical performance. Is that guaranteed? No, it's not guaranteed. But that's driving forward, looking in the rearview mirror. We know where it was and how it normally reacts this time of year. Okay, normally up a little bit, down a little bit. Fine. Do you like it or not? It's a simple question. You either like ExxonMobil at 114, or you say, you know what, I'll pass, I'll find something else. I like ExxonMobil. And I have bought it many times. And I will continue looking at it every single quarter just before the EX date. That's when they pay their dividends. Next. Geraldo, we looked at Exxon already. Kenny G, we already looked at Intel. Lee, could we take a look at Spot just because it's going up so much? All right, now Lee, you're new here, and I don't want to discourage you from asking questions, but Spotify is going to be a no, okay? Now, so here's a question. Number one, I don't like going over 250 bucks. Okay, hold on a second. Let's do a video on this one. Why not? All right, we're looking at SPOT, Spotify. At this current time, it's at 327.29. It's way too close to the high for me. Look where it is. The high is 360. Well, we're way too close to it, and we have way too much space, because a year ago, we were at 130. Okay, now we're at 360. Well, 130, 360, that's more than double in a year. Well, of course there's going to be profit taking. And I want to be nowhere close when the profit taking starts. Because you're way up here, okay? And she's going to come down all the way from 130 all the way up to 300. You have all that space right there. Okay? You got a lot of space coming to the downside. So I don't like getting involved with companies that make this kind of a run up. Because I'm definitely not going to buy it at the high. Because I'm not waiting for it to go higher. I don't do the game. Sorry, I just don't. All right, H, we already did Ford. Bama Redneck, STN. It's on Warren's list. Nice premium. STNE. Never heard of it. But we'll take a gander at it because that's what we're here for, to take a gander at some of this stuff. Okay, so you say STNE. STNE. All right, interesting. Now, it's on Warren Buffett's list, so I want to check and see what kind of dividends they've been paying. STNE. Because I've never heard of this company. Stone Company Limited. Dividends only. There are no dividends for the time selected. That's going to be a no for me. But considering it's on Warren Buffett's list, let's see what it looks like. Okay? Now, STNE, although it's on Warren Buffett's list, it's not on my list because they do not have any dividends. So where am I going to make my money? A year ago, we're at 14.05. Bottomed out in mid-October at 9.38. Topped out at 19.48. It almost doubled in price. And that was in the beginning of February. Well, from here, last 90 days, she just dropped. Okay, last 30 days, here we are. 30 days ago, we're at 12.09. Got like a triple top at 13.81. From there, again, yesterday is our 30-day bottom. Today's to the upside, one more day to the upside, and that's an invitation for me. Well, great. At 12.11, the 12 is going for 25 cents. Well, that's over 1%. Next week, the 12 is going for 65%. Well, that's over 3%. Take your pick. Let's take a quick look at seasonality on this. What does this company normally do this time of year? Well, this time of year, okay, this time of year, she's going to go up until this weekend, right? And then she's going to drop. So, sorry, too many things going in the wrong direction for me for this one. Number one, no dividends. Number two, historical performance is going to the downside. Okay? It doesn't mean it's not going to go up. It doesn't mean Warren's wrong. It's just not for me. Holy cow, we lost a whole bunch of viewers. We're only at 88. We were at 200 earlier. I must have said something that they didn't agree with. Oh well, it is what it is. Can't satisfy everyone. Okay, let's continue. More questions, more questions. Mike, you are wasting time, not making sense. No one knows future of stocks. I will not watch you anymore. Well, all right, Mikey, one less turd I need to worry about. What about Ever? We already looked at Ever. Okay, and Ever was basically going to be a no because they don't have 20 years of increased dividends. What do you consider a weekly? Well, Gary, if you go to the CBOE website, Chicago Board of Option Exchange, and you ask them for every stock or every entity you can trade with a weekly option, well, they give you a whole list. Okay, basically, 9 August 24, that's this Friday. 16 August 24, that's next Friday. 23 August 24, that's the Friday after. 30 August, well, that's the Friday after, every single Friday. Okay? Okay? Oh, Realty Income, August 16th. Okay? That's September, December, January, March, June, July, January. That's a monthly. Okay? So there's a distinct difference between weeklies and monthlies. Monthlies you can only trade once per month. Weeklies you could trade every single week. So if you take weekly options and you combine them with companies that have consistently increased their dividends for more than 20 consecutive years, you get about 300 companies. Excuse me, about 300 companies that do that. All right, Garrett, hopefully that answers your question. Yeet. Have you ever heard about the ticker EVER? Oh my goodness. EVER. Yes, here it is right here. It is at a high for the year. That's a no. It's a monthly optionable stock. That's a no. Let's see how many more no's we can get forever. Okay. EVER into Yahoo Finance, and that's going to give me some interesting information. Okay. There are no dividends in the selected time frame. Okay. Monthly options? No. High of the year? No. No dividends? No. You got a hat trick there, buddy. No, no, no. Okay, yes, I heard of EVER. Never heard of it before, but I heard of it tonight, and it's a no, no, no. It just doesn't fit my parameters. If you want to do it, hey, more power to you. I just don't like it because it's at a high of the year. I don't buy high waiting to go higher. It's a monthly optional stock, which means I can only do it 12 times a year. It doesn't work for me. The numbers just don't work. And it has no dividends. The name of the show, or the live, whatever you want to call this little enterprise here, Dividend Investing for Weekly Cash Flow. Well, if it's dividend investing for weekly cash flow and EVER doesn't have any dividends, why are you wasting our time taking a look at it? This is the second time I've looked, third time I've looked at it, tonight. And it's been no the first time, no the second time, and 3 no's the third time. So I'm not quite sure what it is you want me to tell you. You want me to tell you it's a great buy? Well, hell no, I ain't gonna do that. Because I wouldn't buy it. I don't buy at the high waiting for it to go higher. I just don't do that. It doesn't make any sense to me. Okay, if you're gonna make money in the stock market, you buy it low and then sell it high. You don't buy it high and wait for it to go higher. But hey, you can do whatever you want. You know, this is America. We have that privilege of doing whatever we want to do. All right, so EVER, EVER, it's not no, it's a no, no, no. All right, let's go. More questions. Okay, more questions. Sharik. Okay, I don't even know how to pronounce that one. Shirayuki. Is that right, Shirayuki? Medina. The EX date. All right. Do you buy 2 weeks before the EX date or the pay dividend date? We already answered that question, Medina. All right. There's inflation protection in a portfolio with more appreciation potential, though no. I'm not quite sure. Okay, user 3513. Stock buybacks are the new form of dividends. Yeah. Okay, I'm going. Let's just agree to disagree. Okay. Intel paused dividends for the first time in history. Frankie, you're absolutely correct. Thoughts on? Thoughts on Japan's rate halt? What does that have to do with dividend stocks here in the U.S.? Okay, I don't trade Japanese stocks. I don't trade on the Nikkei. So it has actually no effect to me whatsoever. Wildcat Sam. Hello, everyone. Sorry, late for me. How are you doing, James? I am absolutely delightful. Today is Tuesday. Okay? I got a lot of questions like, how am I dealing with the pullback? How am I dealing with the crash? And that's like, what crash? I didn't notice anything. Okay, I got more than 1% in almost all my accounts this year. I mean, this week. And it's only Tuesday. Gemma Sexy. Ooh, you want to take a look at MPW. I actually like MPW. All right, we're going to do a short video on MPW. Let's just hold 1 second. Okay, take a look at MPW. A year ago, we were at $9.90. We bottomed out in the middle of January at $2.89. That's a drastic drop. Now from there, look what we've been doing lately. Okay, a 90-day high at $6.57. 90-day bottom here on July 7th at $3.92. Okay, so we've been following this one for the past couple of weeks, and it's been floating around between $4 and $5.50. All right, well, at this moment in time, look at 30 days ago. Wait a second, right there. Okay, 30 days ago was the 30-day bottom. All right, she shoots on up from 408 to 539. Now, 408 to 539, that is a 25% increase. All right, so we're looking at MPW. We got a 25% increase between 30 days ago to the 30-day top, which was on the 25th. Now, from 539, she drops down to 440. Okay, that's a $1 drop. Okay, so she goes up 25%, and then she drops 20%. Yesterday was a 30-day, was a bottom. Today she's higher. What is she going to do tomorrow? Now, I already own a bunch of these things, and I have no problem whatsoever floating around in this area. Okay? I'm not looking to hold it forever. If I have to, I will. Good evening. Can we check out PLTR? David, okay, as much as you like PLTR, I look at it every day, and every day it's a no. Okay, I don't think PLTR actually has the dividends that we're looking for, but I like MPW. MPW has been paying out very nicely. But PLTR. Okay, well, here we are. And here's the reason why I don't like PLTR. PLTR. There are no dividends in the selected time period. No to PLTR. Now, when it says dividend investing for weekly cash flow, if the company doesn't have dividends, why are we looking at it? I mean, you may like PLTR. Great. More power to you. Look what it's done. You know, the 30-day high is here, $29.89. She made a big drop. Well, a double gap down. Okay, gap down on Friday, gap down today. And look, she gapped up today. Oh, you have fun with that one. I don't like it. It doesn't pay dividends. Why are we bothering with it? That's just my personal opinion. Okay, I have been wrong many a times. But I don't want to look at something that's not even in my realm, so to speak. Ooh, GD wants to look at Harley Davidson. Wait, let's take it ADM. What the heck is ADM? AD Archer Daniels, is that right? Archer Daniels, a Dividend King. Ooh, nice pick. Okay. ADM, Archer Daniels. A year ago, 87.37. Bottomed out in the middle of January at 50.56. Channeling to the side. Look at this channeling to the side for the last couple of months. Last 30 days. Check it out. 30 days ago, we're at 62. Jumps up to 66. Drop, recover, drop. Yesterday was the 30-day bottom. Today's a little bit higher. And we're sitting at 58.79. So we'll be looking at this 59s. The 59s are 20 cents a share. Terribly sorry, but as much as I like Dividend Kings, and they have 50 years, that's 5 decades of increased dividends. But the numbers just aren't working for me. What's next week's 59s? Well, next week's 59s are just over 1%. Well, that's still a 0.5% per week. And Archer Daniels, they've been in business for over 50 years. So they have 5 decades of increased dividends. they don't really need to adhere to my rules. My rules is 1%. This is only offering a 0.5%. You'll find that some of the dividend kings will do that. Johnson & Johnson, Coca-Cola, sometimes Pepsi, Home Depot sometimes, Archer Daniels. Some of the dividend kings don't have to have high premiums. Okay, okay. GD, you want to look at HOG, HOG. Interesting. Next, draft plus 60. Okay. Okay, we're looking at Harley Davidson now. A year ago, 36.68, bottomed out the end of October, topped off at 43.96 the end of March. Okay. Last 30 days, what we like. Okay, 30 days ago was the 30-day bottom, and that was 31.67. Now from 31.67, she shoots up to almost 39. So from 31 to 39 is $8. $8 on a $30 stock. Well, that's over 15%. Okay, so I'm just letting you know, as an investor, if I see something going up 15%, hell yeah, I'm gonna take my profits. Well, yesterday was a bottom. Today she's up. Well, what happens if she's up tomorrow? Well, at this moment in time, the 36s are going for 45 cents. Well, that's over 1% for Harley Davidson. So the question you need to ask on this situation is, do I like Harley Davidson at 36.12? Well, a couple of weeks ago, well, last week, the high was almost 39. Yesterday was the bottom at 33. Okay, from 39 to 33, that's $6. $6 on a $36 stock, that's a 20% drop. Is that right? 6 times 5? Yeah, something like that. Okay, so that's the question you need to ask yourself. Do I like Harley Davidson at that price? What does Harley Davidson usually do this time of year? Well, this time of year, okay, this time of year right here, okay, a little bit to the upside. Okay, great. Okay, this is the seasonality chart. This told you what it's done over the last 10 years at this time frame. Okay, so the question is, do you like Harley Davidson at 36? And are you willing to hold it at that price? Okay, what is next? Ooh, all right, I missed some of these questions. All right, I did MPW already, Chemisexy. Good evening, check on where I did PLTR. PFG, what the heck is PFG? PFG. All right, PFG is going to be a no because it's a monthly. Monthlies just don't pay for me. If you like it, more power to you. Okay, I really can't help you out with that one. Okay, I have a certain way of doing things. Okay, some people don't like it, some people do like it. Okay, it's safe, predictable, consistent, 1% per week. And if I'm only looking at good quality dividend stocks, I don't see there being a downside, because every company I look at has increased its dividends for 20 consecutive years. Does that mean they're going to do it for 22, 23, 24? Doesn't mean that at all. It just means that if I'm going to have the odds and probabilities in my favor, one of the odds I want to have is, are they consistently profitable, and do they consistently increase their dividends? Okay, that's just me. You guys got to figure out what is right for you. Don't listen to the damn word I say. What the hell do I know? I'm just reading a bunch of numbers. ADM, we already looked at that one. HOG, okay. We looked at that one. ARR. ARR. Armor Residential. Again, that's going to be a no. Monthly optionable stock, I don't do monthlies. Sorry. The numbers just don't work. Okay, when you start looking at the numbers, okay, 1 + 1 = 2 no matter where you go. No matter where you go. Okay? Monthly optional stock, 12 times a year. That's all I can do. And hey, if you're okay with 24 to 25% per year, great, do the monthlies. It's less work. You don't have to do it once a month. But you have to guess, where is this stock going to be? It's at $20 now. Right, great. Where's it going to be in 4 weeks? Yeah, that's a game I don't want to play. Okay, and I need something to do to keep myself busy because I'm retired. I find this to be fun, exciting, and I enjoy sharing with you guys. Okay, till the day comes where you guys, don't really appreciate it anymore, and I don't get anyone watching, then I'll probably stop. But until then, I've already made the commitment to be here every single night until December 31st. So, let's see how it works. Okay, so ARR is going to be a no. Geraldo, definitely a no. Has my for that. Manny, hey, when was the last time you heard about Sears? Never. I haven't heard about Sears in decades. Well, actually, not really. Because the interesting thing, Mr. Murphy, who used to live at the top of the hill, okay, see, growing up, I lived second house down from the top of the hill. Mr. Murphy and Mr. Humphrey lived on the top of the hill. Murphy's on one side, Humphrey's on the other side. Mr. Murphy worked for Sears for decades. And he left his children a shit ton of money because of how much money he made working for Sears for all those years. Dividends are not the most important factor. Montreal, New Jersey talk. Monreal? Is it Monroe? Oh, Monroe, New Jersey talk. Okay, no. In the grand scheme of things, no. Dividends are not the most important things. Okay? Time with family and relatives. That's what I consider to be the most important. PLTR has great option premiums. Well, Monroe, awesome. More power to you. Okay, so the question would be, okay, when? It's not an if. Okay? PLTR. Okay, let's take a quick gander at PLTR. Down, up, down, up, down, up, down, up, down, up, down, up, down, up. What do you see? It goes down, it goes up. Wonderful. What are you making when the stock goes down? Absolutely nothing. Okay? If you like the stock, hey, more power to you. Okay? It was at 30, now it's at 22. It lost $8 in the past couple of weeks. Okay, from 30 to 22, it lost $8. Great. What did you make when the stock dropped? If they're not paying a dividend, if they're not sharing their profits, now you, not me, because they don't have no dividends, don't want to be bothered. Now you have to look at all of the quarterly reports. You have to look at all of the information on what's going on with the company. How are they spending their money? How consistently are they profitable? And are they profitable? And how can you tell? You're looking at the quarterly reports or the annual reports. Great, fine, more power to you. I like cheating. You call it what it is. Because a dividend is the portion of the profits the company gives to their investors. Okay? So, if you invest your money into a company and they give you a certain amount every single quarter, every 90 days, and that number goes up every single year, well, you know they're doing something with your money that is correct because they're giving you higher and higher and higher profits every single year. Okay, let's take a look at your company. You put money into PLTR. You put it there and you just wait. What the hell are you waiting for? Well, you're waiting for it to raise to a certain price where you can sell it and you can get your profit. Well, that's capital appreciation. Sorry, I'm not at the point in my life where I want to sit around and wait for a stock to move. Because what does it do? It goes up, it goes down. 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 Well, here's the thing. If she goes up, great, I want to sell. She drops, I want to buy. Okay, she goes up, I want to sell. She drops, I want to buy. She goes up, I want to sell. She drops, I want to buy. I don't buy and hold anything. I was married once, it didn't work out. I do not want to marry a stock. Some people like marrying stocks. You buy it, say, yes, I do, and you hold it on for however long you think you need to hold it until it goes from, what is it, 14 to 28, so it took a year to double. Okay, fine. More power to you, but you got to sell it in order to get your profits. And what if it went up higher? Well, you miss out on that. Well, what if it drops down to nothing? Well, it's a game. You play by your rules, I'll play by my rules. I personally like a safe, predictable, consistent 1% per week. That works for me. That's all I am teaching here. If you want to do it, hey, more power to you. If you want to buy and hold, hey, more power to you. I never tell people what to do with their money. I just give my opinion. And my opinion on PLTR is hell no. If you're not going to share your profits with me, why would I invest money with you? Think about it. With a promise somewhere in the future that I'll actually make something off of my investment, yeah, that doesn't work for me. Okay? I get bills that come due every week. And however much money you think I got, nope, I don't. I have enough that the 1% that I make on a weekly basis takes care of my essentials. All right? Bruno wants to look at Chevron, CVX. Now, I like CVX. And it seems to be one of those companies we're going to be keeping our eye on, because a year ago, let's do this. A year ago, Chevron, CVX, was at 160.05. It topped out the year at 171, and that was back in end of September. Okay, well, the bottom of the year for Chevron was in the middle of January, and that was 139.21. Well, let's take a look at the last 30 days. Uh-oh, I do not like doing that. Okay, so the last 30 days, right here. Okay, so 30 days ago, we're at 154. 2 weeks later, 164. That's a $10 increase. Well, on a $150 stock, $10 is not quite 10%. Not that big. A little bit of pullback, a little bit of retracement, and now she drops 161 to 143. Today is the new 30-day bottom. Okay, so in Chevron, we got a 30-day bottom here. Well, I'm going to keep watching it because I like 2 days to the upside. Tomorrow could be another bottom, or it could be higher. I don't know, but I like Chevron. I like 2 days to the upside and the bottom, and you're only going to make your money in the stock market when you buy low and sell high. Now, there's some people want to buy and hold on to forever. Hey, more power to you. Me, I'm a cash flow kind of guy. I want to buy it on Monday, sell it on Friday, get my 1% per week. That's over 50% per year. I'm okay with that. Chevron is in my roster. I do take a look at them every 90 days when they pay their dividend. Does it make sense to me? That's the question I'm looking for. Okay, so right now at 143, I'm looking at the 144s, and they're paying 123, not quite 1%. So I would continue to look at it, wait for it to find the bottom, wait the 2 days to the upside, then decide whether or not it's a good trade or not. That's just my opinion on Chevron. All right, I got 11 more questions, no more stocks. We're past 11:30. So let's see what we got. Bruno, Cool Beans. Monroe talk. Dividends are absolutely the most important factor for James's strategy. Yep, they are. Thank you for that, John. You're absolutely correct. CVX, we looked at that one, we looked at that one. That's it. That's all the question. All righty. Well, everyone, this is James from Dividend Stock Talk, brought to you by the 10-Minute Trader. Now, be leery, because there are people pretending to be me. If you really want to talk to me, DM me with your phone number. I will give you a call. All right? Now, I only have one one channel that says Dividend Stock Talk. Only one. That's this one. Now, I do have another channel called The 10-Minute Trader. Now, that's what the videos that I'm shooting tonight. That one's just started, so it's not much going on there. I got to wait till I get 1,000 followers before I can actually teach the dividend capturing strategy, which is a total different strategy than this one, but kind of the same, but we're looking for a few things a little bit different. And it's kind of for people just going to start out that don't have a lot of money, but still want to invest. Because the future's coming whether we like it or not. At some point, everyone's got to retire. So, that being said, done for the day. You guys have a great day, and we will see you again tomorrow. Okay. And down, and down, and down.